This is a trade I took in SPX. This is September 6th expiration, 0 DTE. This is a 5-minute chart. And here I'm looking for a couple of levels to act as potential resistance. Right, so we are at the 34 EMA. This is a 5-minute chart, so 34 EMA is at 39.20. 55 EMA is at 39.29. 89 EMA is at 39.39. So if we take out, right, so we already took out the 34 EMA. We take out 39.30, 39.40, we could potentially move up. So what I did, I took a bearish position here. This is a put debit spread. I am risking 485 to make 515. We'll see how it goes. As far as sizing goes, I plan on taking full risk here. So if I was willing to risk, say, $1,000, knowing that this spread will cost me $485, I know that my max size in this trade would be no more than 2 contracts. Planning for full risk, I know exactly how many contracts I should put on. If I'm right, and these exponential moving averages do come in and play as resistance, we could potentially roll over into the end of the day under 39.15 at expiration. This spread makes $5.15 in profit, and if we are above 39.25 at expiration, the spread is going to lose the debit paid, which is $4.85. All right, it's about 1 o'clock Eastern time. Let's have a look at this trade for a quick update. SPX is currently trading right at 3,900. Let's have a look at the chart. This is a 5-minute chart that we looked at earlier today. So as you can see, we took out the 34 EMA, we took out the 55 EMA. This is all on the 5-minute time frame. Ran up to the declining 89 EMA, pulled back initially, came back to test the same 89 exponential moving average. Couldn't take out the level we were watching, was 39.40, came back down, made a higher low, not for long. This higher low did not hold. We're currently at 3,900. Let's see if we are coming down to retest lows of the day. As far as this trade goes, our initial outlay was 485. This trade is currently showing a profit of about $270. Do some quick math real quick. 270 on 485. So this trade is about in profit of about 55% on risk. Not a terrible spot to maybe book in profits with a couple of hours to go. Anything can happen, but for right now, the market is still pushing lower. If market starts to turn around and head higher, I'll post another video update. If not, we can just allow this trade to expire. The put debit spread is now in the money. If S&P 500 ends the day below 39.15, this trade will have a profit of about $515 on $485 of risk. We can do the same math real quick. 515 over 485. This trade has a max potential profit of about 105%. All right, it's about 3:15 Eastern time. S&P right now is trading currently at 39.13. This is the 5-minute chart that we were looking at earlier today. So as we can see that we are underneath all moving averages. However, we are making higher lows yet again against the low of the day. We're currently testing the declining 55 EMA. Next level of potential resistance is at 39.21. Nonetheless, I do think that if the market is going to squeeze higher into the close without making any adjustments, this trade has the initial risk of 485 per one spread. One way to remove risk in this trade would be to sell a 39.10, 38.90 put credit spread. We're able to collect about $4.95 for it, which means that credit that we're bringing in from selling 39.10, 38.90 put credit spread will cover the potential loss if S&P goes above 39.25 into the close today. So this will create a unbalanced put condor with no upside risk, right? We paid $4.85 for the initial 39.25, 39.15 put debit spread. And if we're collecting $4.95 for the 39.10, 38.90 put credit spread, we actually end up with a net credit of about 10 cents or 10 cents or $10 per one contract if S&P is going to finish above 39.25. This trade is going to max out if we pin on the S&P at the close today, somewhere between 39.15 and 39.10. We have a max potential profit of just over $1,000. And if we go below 3,900 into the close, this is our break-even point. We could potentially lose money if S&P 500 is going to finish below 3,900 down to about 38.90. At 38.90 or lower, our max potential loss in this trade is $990 per one contract. For right now, this trade is looking okay. We have about 40 minutes to go. It looks like the market is kind of sideways at best. I think I'm going to hold this trade into expiration, and I'll recap after the close. It's just after 4 o'clock. Market has closed. S&P 500 options are still trading, except for those that expire today. So the weekly options continue to trade until 4:15 Eastern Time. Options that expire today have stopped trading at close at 4 o'clock. Looks like S&P 500 was at 3908.55 on the close. This position here, we almost pinned the max profit area, which was between 39.10 and 39.15. Didn't quite get there, but at 3908.55, we have the 39.25, 39.15 put debit spread that's worth its max value, which is $10. And then we have the 39.10 put that we're short. That 39.10 is in the money by about $1.45. This means we take away $1.45 from $10, which is the max value of the 39.25, 39.15, and we end up with the value of this position at the close of $8.65. So we have an $865 profit in this trade. Max risk in this trade was $990. I'm going to pull up my fancy calculator and we're going to do some very basic math. So if we had netted $865, obviously before fees, commissions, and so on, 865 profit divided by 900. This trade has a return on risk of about 96%. So we had a bearish trade, market turned neutral. We added a position, made it slightly neutral. We did take a little more risk by adding the out of the money put credit spread. Nonetheless, we walked away with a pretty decent return on risk, all things considered. We were in this trade for less than a day. We don't have any overnight risk. And with the SPX options trading every single day, we can probably find something similar to this every single day. If you like information that you are seeing here, consider checking us out, MrToptic.com/active-trader. If you're watching this on YouTube, consider subscribing, liking this video, leave a comment. We'll talk to you next time.